let's get to Market Finder. First and foremost, when I get here, I'm going to select the state that I'm interested in. Before I select it, just a quick note here where the map legend here on the left top right corner is looking at what's darker or lighter is based on this drop down here that you choose, monthly investor transactions. If I hover over that location, you can see in the bottom left corner here, it's right here where my mouse is moving right now. Okay. Let me make sure I'm zoomed in a little. Okay, I am. You can see an overview of just that state. I like to look at that state's median sales price, homes sold, homes on market, to get an idea of the state as a whole. So the state as a whole has a 56 days on market. That's not bad at all. And we have a demand of about 3 months, right? So 4390 into 18,000, roughly for 4.5 months, something like that. Maybe that's closer to 5 months, something like that. But between 4 and 6 months, let's just say that, right? And that's normal, not bad at all. Okay. So if I was like an investor wondering, do I want to go in Kentucky? If I'm looking at it, you know, Missouri's looking better, but Kentucky ain't bad, right? And so if I select Kentucky now, say I've decided that that's where I want to market to, I can see which counties now from the same level. So I can see in the top right corner my medium home value. I can see my breakdown of my home prices here by percentage, and then I can see how many property types breakdowns there are. I'm going to go ahead and I'm going to make it single family residence only. You do have a decent amount of mobile homes here. I don't care about condos, and I'm not caring about land in this now. So I'm gonna go ahead and add mobile homes as well. So I'm gonna do single family residence and mobile homes and click apply. This is gonna change some of my counties because some of them, predominantly might be land sales or things like that, and I might not want to be seeing that to decide on which county I want to focus on predominantly, right? I can see my rank of transactions here. This is sorted by the total amount of investor transactions over a 6-month period. So Jefferson's at the top at 978. So definitely the best county, especially now that I've added single family and mobile homes only. And then I can see my inventory here by doing my 2806 divided by 682. I got 4 months of inventory. And so that's great. We like that. Another big thing here that you'll see me once we get to our zip code level is I like my median sales price to be lower than my median home value. This tells me that there's a lot more investor activity going on. Sometimes you'll see like where the median home value is higher than your median sales price. This can be of concern. Okay. And if it's really drastic, it's also sometimes a little sus. So you just gotta most of these are pretty good actually. So you're looking pretty good across any of these, top performing areas. They aren't looking bad. So if I was choosing, like, do I want to go to Kentucky and be, and market there, like Jefferson looks good. There's enough investor activity across the board, and the median sales price is within a good price point here. Okay. This is really important for this median sales price and home value, because let's just say that this value was $70,000. That is way, 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 way below the median value of the state. Okay. And it's also way below the median value of the nation. Right. So it could be a really big alarm that I would want to make sure that I analyze that market to figure out why that's happening, why are the values so low, and then make a decision as an investor if it's somewhere that I want to operate in, right? It could be the thing that turns into, a quadruple millionaire or something like that, because you can buy a stuff really cheap and it's going to be worth 5 times the amount in 5 years for all I know, right? But you got to do that analysis and figure that out to see if you want to operate there, okay? Okay, so once we see that, I'm going to go ahead and choose Jefferson as my county. And that's then going to break this down, the same information, but we're going to be looking at it from the county level. And we're seeing it at the county level with zip codes as the priority right now. We can change it to neighborhoods here, but we're not going to do that quite yet. Okay. And so what I can see right now, I'm trying to move you guys somewhere that's not getting in my way. There we go. As I see the medium home value is 271. Okay. And something that you're about to hear me say is really important. So I want you guys to make sure you write it down or keep it in the back of your mind. I want to stay within my medium home value as much as possible. Okay. Because if I, and we've already looked at this county, so we know that there's some zip codes that have very low values, but really high investor activity. And when I'm doing my analysis, I like to stay within the 60% of the value of the market. And so you cannot just look at this map, like I gave an example earlier, and be like, well, 40215 got 82 investor transactions, so that's where I'm marketing. I'm not saying that that's the case here, but you can't have that mindset. You can't just be like, oh, well, it has high investor activity, so that's where I'm marketing. Because remember, we can market to multiple zip codes, and it's all about trying to focus on the best things for my business first, and then pull that data as a priority, and then work my way to getting to some of these other areas. Because ultimately, I'm going to want to be across the whole county. I'm going to want to be in probably 80% of the zip codes here. I just don't want to be in the bad zip codes that I don't want right now because it's not going to give yield to my business. It's going to create operational drag, right? So like in this case, I'm looking at the medium home value is 271,000. That means your purchases are going to be less than that, of course, but my home values are 271. And I have a good ownership and renters rate. So there's predominantly some owners. There's definitely some rentals in this area. But my price point of the 60%, 40% of the properties are between 215 and 346,000. So what I'm going to do is I'm going to steal 10% from below and 10% from above so that I can be within like 60% of the values in the market. What I'm not going to do is I'm not going to market the things between 890 and 1.2 million. I'm not going to market the stuff between 500 and 900,000. This 500 to 900,000 price point, this is really better for or really like that mid 500,000 price point is really better for that 20% I was talking about, right? Okay, maybe I'll do a campaign against that area, but it's only 7.7% of this market. And so what you're doing is if I do get a deal there, if I don't do the analysis to see what the days on market is for those price points, I could mess myself up because as a county, I'm like focusing on the majority. And sometimes majority is great because it could fly off the shelves, right? But sometimes it's terrible because there might not be enough demand in that majority in order for me to move the deal quickly, and then I get stuck with it. Okay. And so you got to keep that in the back of our mind. And so I'm going to stay within my 60% of the values, and there's a plus or minus there. And so looking at this, we see 20% is 136 to 215. So we can say about $175,000 is probably going to consume about 50% of that. And then if we look at between 345 and 562, we can say about 450,000, maybe we say 475 is going to consume another 10%. And so we're going to go between $175,000 and $475,000 as our price. And if you really wanted to, you could just go from 150 to 500 if you didn't really care and you had the budget to hit those records. So that's what we'll do for this. And so I'm going to grab my notepad here and I'm going to change my value between 150 to 500,000 in value. Okay. And I'm not going to focus on data be above that and below that, because I'm then going to be focusing on like the bottom 10% of my market. And then I'm only going to be and I'll be eliminating the top side of the market, right? I'm going to be in that predominant area, which in this case would actually eliminate 40215 zip code as our better area to start, to build higher value leads that will, ultimately be better for me long term. Not to say that there isn't deals in there. It's just that it might not be the best place for me. I would rather be in 40216 because there's probably going to be like, it's probably going to make me more money. Okay. Now, if I wanted to, I can end up scaling into 40215 and adding that data set in there. And it might not be a lot of records if I do my analysis and I add them anyway. It just depends. We got to get deeper into this and you got to kind of make that decision. But I want to focus on the best 3 to 5 zip codes within 60% of the values that predominantly have enough buyers that I'm not going to have a lot of just BS involved, right? Because another problem as you go cheaper in value in the asset is it's really hard today for that person to like do anything with that money. Like if you're going to buy a property for 35 grand, unless it's like absentee owners, like what is that person going to do if they're living in that property and they make 35 grand? Like go buy a box to live in? I mean, they might have been living in a box already, 35 grand, but like, it's like, you got to think of the operational drag that some of these decisions make in lead management, in sales, and things like that. And so you want to be more intentional. So again, we want to bring in the best data to focus on first and then move out. Okay. And so once I see that, I look at my year built and I see that most properties already are older than 2000. So this is an easy one for us. We'll just leave it at 2010 and older because it's going to be a majority of the market. We're going to leave it at 30% equity because we just want that. That's just kind of like a baseline as an investor. And we're going to validate that with sold properties that you're going to see most everything that sells is selling with equity, a huge percentage of it. And so we're going to leave that in there. It's not to say there isn't stuff selling to investors without equity, but we're going to leave it there. The same thing is true with the 5 years of ownership. You're going to see that there's a lot of activity that will sell for stuff that like is within the last 2 years of ownership, but it's not going to be stuff that like is consistent enough. Not enough people sell a house 2 years into owning it. But markets are different in areas like Fort Walton Beach, where there's 3 military bases that surround it. Really more than that, but like there is a turnover within 2 years for sure. But are they predominantly ones that as an investor, I'm most likely to do deals on? Not really, unless you're doing a very particular niche, right? Like you're, doing sub 2 stuff and solving a very particular problem. Okay. And so looking at Market Finder right now, we can see 150,000. This is just the base one. That's base 2010. And we're going to do single family residences and mobile homes because within this county, it's a very small percentage, but there is 1.7% mobile homes. Not enough to really worry about, but we're not going to like take it out of our data because there could be a lot of opportunity for some nice deals in there. Maybe there's some new construction, tear down, rebuilds. There's a lot of mobile homes are just nice to have as flippers. You might not want it. You can remove it. Okay. All right. So now what we have to do is we got to find which top zip codes we want. And what I'm going to do is I'm just going to hover over a few of these looking at the colors, and I'm going to kind of get an idea of what's inside of our price point and where we're not going to focus. So this try zip codes right here, automatically we're going to remove those out. Again, remember earlier I said that we might focus here because we want volume and we want to be able to have enough inventory, blah, 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 right? This example is still the same. It's just based on my analysis now, I'm removing these from the bottom. I might add them later if I want to operate in that area, but I'm going to be a little bit more sophisticated and I'm going to want to focus on 40216 in this region more so. Okay. And I'm just going to continue to hover over and just get an idea based on locations here. We got 218, 46 days on market. And what I'm doing is I'm looking at the total amount of investor transactions. I'm looking at the median sales price and then the homes on market, the days on market, and that home sold. And I'm trying to combine the sales, remember, sales price is not median value. We're going to be looking at our table down here in a second to see that better. Okay. What happened with our drop down here? Some of these median days on market, we don't have, or the value for some of these. What did I do? Did I click over a page or something? Click off and click back in. Something glitched out. Huh. Well, I don't see that in my table.
And Tyler, you probably click on the total inventory transaction from the last 6 months in the
And
middle
that's
of
under
your
sold
screen.
properties. Yeah.
In the middle, right there, total inventory transaction in the last 6 months. Because you're showing 000 right
Oh, did
now.
I sort it?
Yeah,
Thank you.
yeah.
I was like, that doesn't make any sense. I know I seen it. I ain't crazy. You're crazy. Okay. Okay. So yeah. All right. So I'm gonna look at the median value in a minute. I'm just looking at sales prices at this moment. Okay. So I'm hovering and I'm seeing that there's still a lot of opportunity. I like stuff that has less inventory, low days on market, and is within my value. Okay. I'm gonna repeat that one more time. Less inventory, low days on market, and is within my value range. All right. And I prioritize them based on that. All right. And so I'm seeing that we have quite a bit of options here. We can easily get a top 5 zip codes. Okay. Very easily get a top 5. And even in some of these areas with higher median sales prices, like we can also pretty easily get a top 10. It's really going to amount to the amount of records that we can handle. Okay. And so what we're going to do is we're going to rank this based on, I'm not going to do this like 100%, so I'm going to put this to my right side and I'm going to just generally start with my higher investor activities. And I'm going to look at my last solds, sold in the last month and my days on market. And I'm going to look at median sales price being lower than median home value. Okay. And I'm going to bring up a calculator because I'm going to try to make sure we rank it a little bit more here. So we're going to 189 divided by 51 gives me 3.7. That's below 4, which is great. Remember, 4.2 was our like county level. And so 3.7 is below the county average. So that's great. So we're going to do 4.4026 is like our first zip code here because there's volume there. And it meets my criteria. I'm going to skip that one. I'm going to skip that one. I'm going to look at this zip code 40272. We're going to do the same thing. 184 divided by 42. 4.3, not as sexy, but it has the next highest amount of investor transactions at 63. And so we're going to take it 40272, 40272, but then we're going to add a dash here or an asterisk, and we're just going to put like 4.2 inventory, so INV, and just keep that in our mind because we might find another one that has lower inventory that has less investor transactions, but it's better for us. Notice our days on market here is 50 days on market, 50 days on market. Let's just say this was like 80 or something, then I would eliminate this, or like 61 even. If it's 61, I would have eliminated it because I can see down here there's one with like 48 investor transactions that still fits in our price point that has a much lower days on market, and also has relatively the same inventory. And so I'd rather pull 40299 than I would 40272 because of the days on market difference. But right now they're not far enough apart. Okay. So I wouldn't care. I'm skipping 40210 because of the amount of the price point. 40214. We're going to go ahead and do some math on that. Or 162 divided by 42. That gives me 3.8. Again, below our average. Nice drop, about 15 grand there. We got 41 days. So this is a good one. 40214. In fact, this is now going to get ranked higher because of the inventory. Okay. This was 3.8. I think it was. Yes. Might have been 3.7 even. Okay. So I'm going to rank it higher because the inventory, because the amount of investor transactions is not enough of a difference to make a huge difference, right? It's like 2 a month, but in a grand scheme of things, in the amount that's already in them, it's not that big of a deal. I just want to know that in my business, I consider that a better zip code. If I was to get a lead in it, I might rank it higher. Also, the price point is a little bit higher, which could mean a more stable market in general. Okay. Okay. Now, so 40299, we got 162 divided by 42, 3.8. Great. And the days on market, oops, where'd it go? This one? Or was it? Yeah, that was that one, right? 40. That's the one we just did. Where'd it go? This one. 40299. I did the wrong math. 140 divided by 38. 3.6. Okay, so this is a really great example. So that's 3.68 on 40299. And look at the difference in the sales price towards the value. 348 sale home value, 289 sales price, 47 days on market. Okay. So this zip code just actually, even though it has less investor activity, it still has 48 divided by, it still has 8 investor transactions a month. Right. And so I would now, because of the days on market and because it actually has low inventory, even though it has less investor transactions compared to our top zip code, it's only by like a deal or two a month, 2 deals a month. I would still rather get a deal here. If it was me, I would rather get a deal here than I would in the other one, just because there's more opportunity to make more money if my sales team does their job right. Right. So I'm actually going to put that as like my top zip code. Okay. Because it still has enough inventory for me. And the reason I would do that is because, again, I can 3 or 4 leads, just because this one has more inventory, 3 or 4 leads in 40216 are only as valuable as, say, 1 lead in 40299 because of the $100,000 difference in value. The lower, it's not that much different days on market, so that's not a big thing, but inventory is about the same. But that $100,000 in value means that I have more room as an investor to try to make a 30K assignment rather than like a 15K assignment. Right. And so I think if I were to focus the same amount of energy here versus the other one, I can probably make just as much money. And I'm dealing with a better asset class. Okay. Once you start getting above $350,000 in value, though, different markets react differently right now just because of the cost of mortgages. Okay. So you just got to keep that in mind. All right. So now I have one, I'm going to put on here, 3.6, just so I remember that that's low, 3.6 and, 350K value. Okay. All right. So I'm just going to kind of continue to go down. I'm really going through this like top 10 or so here. I'm at 40299 was my last one. This one's not terrible either. How many zip codes we got so far? 1, 2, 3, 4. We're going to do one more zip code here. And I'm just going to look. These next 3, I mean, all are decent. We got 39. Inventory is going to be our kind of deal killer here, because these 2 zip codes are relatively the same. We got 258. Inventory is a little bit less, a little bit more there. And so I would rather 40219 over 258 because my days on market's a little bit less. But my inventory is, I don't know, quite a bit less. So 114 divided by 27 is 4.2. 140 divided by 90. 114 divided by 27 is 4.2, but 97 divided by 33 is 2.9. So that's pretty damn good. And it's also in a price point, but again, it's 37 transactions, which is 50% less than, almost 50% less than some of my other zip codes. So I'm not going to rank that one higher than these ones, but I am going to rank it higher than, let's see, 40214 has only 50. So it is better than 214, right? And so it's, I mean, at 2 point, what was it? 2 point, I clicked it off. 2.4 was it inventory? That's pretty great. That's a really low inventory. Now it could be because it's a really small zip code, for all we know. But 45 days on market, even still, it means that zip code has a lot of potential. 40219. Let's see where it's at here. 291, 40219, 40219. Where are you at? 291.
On the left of 291, in the middle, right next to the whiting.
18.
Go down.
Oh,
Yeah.
right there. Okay. Yeah, yeah. So it's a little bit darker. Okay, so that's good. Um, it looks like it's kind of close to some. Do we got 214? So we also have 214. So we're right next to each other there. 5.8 we didn't do, is probably next on our list, I'm guessing. 5.8. Yeah, it's like literally a few down from where we were. Or did we skip over it? 5.8 2940299. Oh, we chose 219 over 5.8. That's what we did because of the inventory. Yep, that makes sense. Perfect. So that's my top 5 zip codes. And again, I would continue to do this to just rank which ones I want more. The big thing to see here and notice is that, just again, because it has high investor activity, does not mean that it's the place that I want to spend most of my time and energy. It's not saying I won't spend some sort of allocation there, but if I was to pull all of these, which we're going to see how many records exist in this right now, I definitely would want to make sure that I work into those areas that have high activity that are in those lower values. Okay. Now, some people, their bread and butter is in there, and that's where they live. They live in the swamp, if you will, right? And that's fine. But it's difficult to again get those bigger spreads, which is what most of us want. We want to do less deals, make more money, right? And spend less money doing it. So that's what this will be able to do. So what we're gonna do is we're gonna keep these zip codes here, and I'm gonna now find a few top zip codes or neighborhoods. I'm not gonna dig deep into neighborhoods right now, but I'm gonna show a few neighborhoods, and then we're gonna find how many records exist in these criterias. Okay, so let's go ahead now and switch the toggle at top from zip codes to neighborhoods. And what's cool is, notice some of these areas that we've been speaking about. Now let's just switch it to zip codes again so you guys can see. So think of, like, most of this area is dead, but 40219 is one of the ones that we wanted. So if I just take a quick snippet of that so we can have it up. Give me a snippet, dang. There we go. All right, let's keep that over there for now. All right, we're going to switch this to neighborhoods. And I want you to notice something about that zip code. It's right here. Okay. Notice that there's really 2 primary neighborhoods that are actually really kicking off. Okay. You got Petersburg in Louisville that has most of that inventory. And then you got Forest Drive that has the other. It's important to know that in some of these neighborhood levels, when we get down to the neighborhood level, let me switch back to zip code. Again, it's a big zip code. It's hard to kind of tell what all is in it. But you got 200, you have a lot of neighborhoods in there, and some of them are the best. And the median sales price is 230,000, which means you're going to have sales under that. Okay. You're going to have sales under 230,000. All right. But we have until 150,000 to focus on kind of where we're at. And if we switch this to the zip code level, a neighborhood level again, you'll notice that this 189, the reason why we give a little bit of that buffer is because if we only focused on like 200 or 100, 175, it would have still worked. But a little bit of a buffer is important because otherwise you'll eliminate some of those lower end neighborhoods inside of a zip code that still are good. Okay. Because remember, everything is based off averages and means. But if I wanted to focus deeper on this area, you can see where I could focus most of my energy on this neighborhood. So I'm going to select that neighborhood just to keep it in here. Okay. And I'm going to go back over here, and there may be zip codes that I'm not operating in, like that 2-1, whatever that zip code was, that was 40258 or something. But some of the neighborhoods might be great in those with a lot of inventory, or with little inventory and high investor activity. Okay. And so like looking at let's just find one here. Okay, so like what's 6 divided by 7? 17 divided by 6 is pretty low, right? 2.8. So this is a good example. So this one right here has 12 investor transactions, like on average 2 a month in Parkwood, Louisville. Okay, and its inventory is 2.8 days on market, or 2 point months. So it's great. So I'm going to select that one. I want to bring that in. And I don't think that we actually have whatever that zip code is. I don't think we're hitting that zip code. I think that zip code was one that we didn't include because the overall zip code was not great, right? There was some areas really dragging it down, probably because one of these neighborhoods has very little. This is another good one. Look at this. This is like Pleasant Ridge Park has very low inventory and low days on market. Maybe this one is a zip code that we want. I don't know. But I don't care about the zip codes when I'm looking at the neighborhood level. It's not to say that I wouldn't dig deep inside the neighborhoods within the same zip codes that I'm interested in. I'm just wanting to get the best neighborhoods. And you could skip the zip code stuff altogether and go straight to neighborhoods if it's a small enough market. Like in this county, you could do that. You could be like, I'm just going to go only neighborhood analysis, and I'm only going to pull neighborhood data, right? And then just know what zip codes those neighborhoods are in, right? Is nice to know because it's easier to remember a zip code, but not all neighborhoods in that zip code are created equal. And so for my direct mail, I can focus core to the neighborhood level. All right. And then for my cold calling efforts and such, I can focus and be a little bit wider with the zip code level. Okay. Again, it just depends on the community or the county and how many communities and zip codes exist. There's not very many zip codes in this county, but there is a decent amount of neighborhoods. But you can tell that most of the neighborhoods, you can see where the good ones are. But the same principles apply when it comes to ranking and which ones are my highest priority versus my lowest priority. And I'm just going to give a very quick example of that because that one was a pretty good. Two of these are really pretty decent examples here. Let's do Parkwood in Louisville here. So let's grab Parkwood real quick. I'm going to open up SIFMAP, and I'm just going to search Jefferson County. Is that what it is? Jefferson County. Jefferson. Okay. Why? There it is. So we're going to search all of Jefferson, 314,000 properties total. So let's just search that neighborhood real quick and see how many addresses exist just in that neighborhood. 1,500. Okay. And then if we just do only single family mobile homes, there's probably no mobile homes in that neighborhood, but 1,300. Now let's do it only within 150,000 and 450,000 in value. Shouldn't change too much here. 1,287. And now let's add 2010. And then let's say it needs to be owned by 5 years. And let's say that 2010 owned by 5 years and 30% equity. $459 people, right? And so I can just copy that for now. And actually, I'll just put that down here. use that as the example for characteristics plus neighborhood, 459, right? Like most likely out of these 459 people, there's a huge percentage of them that criteria we just set exists in every one of the 12 transactions over the last 6 months that sold out of that community. Right. And so I can focus deep on making sure I hit the, mail to these 459. And I can go even deeper by, narrowing down to by like absentee owners and so on and so forth. Right. So I just wanted to show that if I do this 459 and multiply it by 10, now you got 4,500 people in very key locations for mail that are very, like, if you get a deal there and list it, it's got very quick days on market. And what we can do is we can actually even go a little bit deeper here. I'm going to remove the whole area here. I'm just going to add that neighborhood again. In fact, I'm not even worried about the neighborhood. I'm just going to do this. I'm just going to say, I just want to see all pending investor transactions here. And click apply. And we can see there's quite a bit of pending investor transactions here. This one at $299. Lad LLC bought it for $170. Actually, it was a wholesale happened. A Vision Housing Acquisition sold this to Lad, made a quick 15 grand, and now Lad is listed at pending at $299, and he bought it for $185. And so right now, boom, I just got 2 buyers, right, just in that neighborhood. And there's probably going to be a fair amount. Frank Investment, $249, they bought it for. I don't know. This is just land, 45,000. And so again, I can very quickly validate that, hey, there is in fact opportunity here because Portland Investments Group 355. There's people buying stuff in this neighborhood, and this is just people within the last like 18 months that still have pending transactions to see what's going on. If we were to switch this to a flip, we can see things that flipped and it sold, say since up until January, it sold. Right. And look at all those flips. Oh, it's showing zeroed out, but those are the results. There you go. Right. So, I mean, there's a lot of opportunity here. So great neighborhood. Okay. Sweet. So let's do our base characteristics now. Actually, let me open back up SIFMAP. So we have our 3 neighborhoods. So I'm just going to copy this information. I'm going to put this under my top neighborhoods there. I'm going to put it under here. I'm going to put it under here. Okay. So, those are, 3 great neighborhoods. You'd make a whole list of those. All right. But now let's see how many records exist in our county at our characteristics level. Okay. So we're going to do 150 to 400,000 in value. I'm sorry. We're going to up to 500,000 in value. 500,000 in value. That's what we put before. Click apply. It gives us 208. And we're going to add single family and mobile homes. Click apply. 176. And then I'm going to click on my more filters. I'm going to do 2010 and older. And then I'm going to, I'm going to do, where's it at? I'm going to do years of ownership, 5 years, 30% equity. Alex, I think it was Alex. If you're here, put your email, send me your email in Zoom, and I'll actually do this in your account and save it as a filter preset.
Okay, perfect. Thank you.
Yeah. Values ARV. So this is not the value of the asset that like it's sitting in. It's ARV, because we would have no idea that like, hey, it's needs 100K rehab, right? So click apply, and that gives us 62,000 records across the whole county. And so he's going to give me his this, and I'm actually going to, since I'm already there, I'll be able to access AI scores through him. So what I'll do is I'm going to try something. I've never done this before, but we're going to give it a shot. We're going to go reisif.io. I'm going to log in on this page. I'm going to keep that open. And then I'm going to impersonate you over here.
My login page actually might be under info@lstproperties.com.
That's it. All right, cool. All right, so I'm going to grab /SIFMAP and all the way over and see if I can just paste that here. Sick. Okay. All right, look at that. Close that out. All right, so now we're in his account so that we can actually make this valuable for him here. And we got 662,000 properties that are between 150 and 500,000 in value, single family mobile homes, and they are older than 2010. They have 30% equity and been owned for 5 years. All right. And so obviously that would be a lot of mail, but we're going to put it over here underneath our base characteristics. Now we're going to apply an AI score over 40 and just see how many exist with that. 16,000. So that's obviously a lot less, right? Like, I would much rather mail these 16,000 than these 62,000 in regards to like saving money. But of these 16,000, what we already know based on what we've seen in Market Finder is like, I don't care about some of these neighborhoods or some of these zip codes, right? So now I'll do the same exercise, but I'll do it at a zip code level. But first, I'm going to go ahead and I'm just going to save this filter for him. That way we can have it as well as we're doing this. And I'm going to call it base AI 40 plus Jefferson. I'll call it base data, or I'll call it base chars with AI 40 plus Jefferson. That way, you know, if he wants to, I can click on dashboard now, click back to SIFMAP, and I can just click this drop down and click on that, and it gives me that filter all set up for me so I don't have to do it again. Okay. All right. So now let's go ahead and add under our more filters here. We're just going to add these zip codes in. So we're going to go 40299. We're going to go 40216, 40219, 40214, 4020272. Okay. And so we're already, when it comes to AI score, we're already at, you know, only 16,000 records, right? Like he might have a direct mail budget that he's trying to hit and hit more records for his conversion rates, right? And that's fine. We only chose the top 5. There's plenty more opportunity inside of Jefferson County to where he could have added more zip codes. It's just we focused on the ones that were the best, in our opinion. We also, let me show you something else. Let me click apply on this first before I get off on a tangent. So that's 5,659 of them. So we're going to grab that. We're going to put that with county characteristics plus top zip plus AI. That's how many records. Now let's remove our AI score minimum and see how many we get now. 20,000. So that's a lot, right? But by just focusing on the top zip codes, we were able to reduce it from 62,000 in the county down to 20,000 in the county. And by focusing on the top zip codes that we did our analysis on with AI score, we removed it from 16,000 records to 5,600 records, or 5,700 closer to. And so I went from $2,500 a month. And then I could also cold call these people and I can do deep prospecting to these people because I know that those areas are really good areas and have opportunity. If I'm not getting in contact with people, if I'm getting return mail, if I'm getting these other things happening, I can reallocate some of that direct mail budget, for example, to having and hiring a direct mail deep prospector that's deep prospecting my return mail and cold calling them and trying to get a hold of them, right? And making more money out of these 5,000 records rather than kind of, you know, praying. And then I can scale that by adding more zip codes as I, you know, close more deals from it, right? So just to illustrate, by applying an AI score here, it's just getting me closer to the target. But I can go even deeper with that by adding now, for example, let's add a 40 or more AI score. And I know we haven't even gotten to sold properties yet here. So We're going to show that and how we can refine this even deeper. I'm just going to say that most likely there's senior owner sales here. And so we can add a distressor of senior owners and then click apply. And that's going to give us even less, 1,500 people. You notice how you have actually a decent amount of these in your account already. This little funnel means they're in your account. So that's great. That means that you're already hitting some of these people that have high opportunity in them. But now I can become super targeted by sending mail to these 1,500 and cold calling because I can prioritize them because I've surfaced them. So I can do, in this case, county characteristics, zip codes, and distressor senior owners. But I also added an AI. So I'm going to do senior owners plus AI, right? And so that's 1,500 people. Now I can go even deeper and I could say, okay, well, I also want them to have owned more than 5 properties, but I only want one of them here. And that's going to narrow me down to 85 people. So these 85 people own more than one property in their portfolios, and they have a high AI score on these particular addresses and they're senior owners. And you can see most of these are actually absentee. I open up some of these and this person owns 11 properties. So this will give me high value correct numbers. All right. And in fact, here, I'll just copy this 85. That's probably, here you go, right here, 85. But I did do, again, AI here. So I'll do AI like this, plus AI plus distressors. Just because he's an AI customer, anybody who's not AI, you would remove the AI from this and you'd only have, whatever that quantity is. Like in this case, if you removed high AI scores, it'd be 87. So not that much different because it's a very, very niche filter that we're on right now. Okay. So, let's go look at sold properties now. And I'm going to back this out a little bit for him. And I'm going to save this filter really fast. I want to make sure that we have no senior owners. I just have the zip codes, top 5 years of ownership, not listed. And then we're going to add 40 or more AI score again. And then I'm just going to, I didn't remove the senior owners. Why? All right, I'm going to save this filter and I'm going to call it base chars plus AI plus top zip codes. Jefferson. Okay. And for my neighborhoods, all I got to do is remove the zip code focus and add my neighborhoods to it. Let's copy those, paste that under my neighborhoods here. And click apply. And that's 690. Let's zoom out. I might not see everything. Just be safe. Okay, 697 that meet the same exact criteria with a high AI score. Basically it's a base criteria. I'm just adding AI score and I'm just narrowing it down to these locations. So again, I might add another 10 different neighborhoods to get this number up to whatever I want it to be. But I'm gonna go ahead and save this and I'm gonna call it the same thing. We're gonna go base cars plus AI plus top NBs Jefferson. Right. So you kind of see 60 from 67 to, was it 697 to 1,500 to like 5,000 or whatever those combos were. I can't quite remember. Okay. And so if I wanted to filter by this, what I could do is I just click my drop down, select it, and then I could add another neighborhood here. And then I could just click update filter. If I change this filter, like if I change this, let's say 50. And once it changed, it lets me click update filter and then it'll save it. So you can change it to whatever you want. Okay. So the goal for pretty much everybody at scale in metro markets and areas that have high populations and a lot of activity is to work to get to this point where you can see, if I apply an AI score, how can I make my stuff cheaper? And the reason that we can do this is because if I go under my sold properties, and I'll just do it from his account here, and I filter by Jefferson, we already showed it before. In his case, he's got a very high, that area's got a very high AI score conversion rate, but it could even be a lot better potentially based on these top zip codes. But let's just see. So I'm filtering by Kentucky, Jefferson, and I have 40 to 100 AI score. If you're not an AI user, I don't want you to think that like, oh, well, this section don't matter to me because he's talking about AI scores. It does, because as a non-AI user, I can still use the AI score analysis to tell me how good of a market it's in, right? Let me turn on sensitivity mode real fast so we don't get ourselves knocked. And so it's still very useful for me to see this because it tells me about the market, because this is market analysis, right? I'm going to go ahead and add a filter here by clicking advanced filters, and I'm going to choose property type, single family and mobile homes, because that's what we used. Notice that increased it by 1% just by focusing on that asset class. And then what I'm going to do is I'm going to just start adding some of these zip codes and see, maybe it's going to go higher. It might go a little bit lower. Let's narrow this down now by the zip codes that we're focusing on. So that one's a bit less, right? So there might be activity there that, so what happens, what could cause a low AI score? Let's talk about that just very briefly. If there's a lower AI score, it could mean that some of the reasons which are selling are predominantly not because of forms of indicators of distress. It could be just like people own their properties free and clear, they're old, they pass away, and their properties get sold, right? It's like very, very generic. Like they're not bad situations, okay? And we can kind of see that by looking at our distressor pattern here, mostly like what 30, almost 70% is like just free and clear properties, absentee. There's not a ton of distress going on here. Okay. Low income a little bit. So they're just not very likely. Okay. But let's continue to add some. Doesn't mean that, folks on AI scored properties is a bad thing there. It's just that, it might not be as needed for that zip code. Or, I mean, whether you apply it or not, it's not going to make any difference, I guess is a better thing to say. It's not going to make any difference because if you didn't have it, you wouldn't have it to apply. So if you did apply it, it's basically the same thing as not having it. So that zip code jumped it up to 68%. So that one has a lot of other things that are causing it to have indicators of sales. Not really seeing on the right hand side with my distressor patterns what that difference is. I see a little bit more low income there, not as much equity. Senior owners are about the same. More absentee owners, definitely more foreclosures in that area. So there's some other indicators. So we're going to continue adding it and seeing what we get. So 40219 jumped it up quite a bit more, even still 73%. 40214. And by the way, it makes sense that these ones that, because the median price in this county is where it's at, these are like the top, this 40299 is one of the top like zip codes. I would say probably like the top 5 when it comes to asset values. And so it makes sense that if they sell, there's just not as much of a, like, of the 1,800 data points that are looked at, it makes sense that there wouldn't be ones that are like red flags, 40214. Already did that one. 272. Okay, so we got up to a 76% prediction rate. And so this tells me these zip codes are good. The AI score up in this 40299 doesn't play as much of a role, but that's fine if we apply it because it's still getting us closer to the target. It's just that only 40% of those are actually converting from that. It means that most of those people are just like equity and no problems going on. They're just probably, they got their shit together. Basically what it boils down to. Okay. So what I can do now is I can see my distressor patterns being equity. I got 40, 50, 67, nearly 70% of the properties that sold are equity. So I know that applying an equity percentage is definitely something that I want to do. 22% are absentee owners, but that means that the rest of them are not. And so the only time I would ever only do absentee owners is if I'm specifically trying to target somebody. Okay. I'm not gonna say, oh, I only want absentee owners. If I go to my, SIF map here and I filter by one of these presets, let's just say it's just the base 40 plus AI score in Jefferson as a whole. I'm not going to just be like, oh, I'm going to add absentee and that's going to be my list, because I'm going to put myself in a bad situation, remove 6,000 people. And inside of my actual properties that sell, like only 22% of the sold properties were actually absentee owners. That means 80% of the other ones were not absentee. And so there's a huge percentage of the investor transactions, or just transactions, period, that are happening in the owner occupied space. A lot of new investors mess up because they think that absentee is like, I understand it's under a distressor, patterns here. But absentee is not a distressor, truly a distressor. It's an indicator, right? Senior owners are not distressors, and then neither is having equity, right? Like having equity is a blessing, getting old is a blessing, and then owning more than one property is a blessing. But they're indicators that give us an idea of things that have value to me. They're distressors in the sense that if you are of these things, if you have these characteristics, it makes it easier for me to do a deal with you. Right. So if I want to go niche, I can do AI 40 or more across the whole county. I can do absentee owner, and I can add a custom combination for senior owners. Right. And I can do the 5 years of ownership, and then I can click apply, and it's going to really create a very niche county wide list. And that's fine too. We have a user, Phil, who took this training 2 weeks ago. He started doing this thing where he grabbed like 150 or 200 records at a time. And I think I heard yesterday or something on the Deal Flow Challenge, he's got one or two or something like that, like contracts from, maybe it was 5. I don't remember it, but either way, he's got deals from just narrowing into 100 records at a time, doing criterias like this, using this training. So don't sleep on it. Like, it's very, very valuable to call through 100 people. A lot of people just don't think it is, because like, that's not enough people, because they're used to this like mentality that like you need more. Like, no, you need higher contact rate. You don't need more records. You need higher contact rate against the right people, high value prospects. Okay. So what we can do now is using sold properties, we can adjust, if we need to, some of our criteria. We can look at our distressor patterns. For the most part, senior owners is great. And it looks like pre-foreclosures list pending is a pretty high percentage for you in low income. So what I might want to do is I might want to create a system-wide, even without adding the AI score to the equation. Okay, I can leave it. That's fine. But I might do a county-wide just for, list pendants. And I might want to pull those down on a regular basis and not care about when they were owned, right? As long as they have equity, I don't care when they owned it. If they're in list pendants, that's 61. And I might bring those down every week. Honestly, you should also become first to market on that niche, right? And just bring them in all the time, right from the county. It's going to be really great as well. And then also might want to do the same thing for low income. I might just look at, hey, anybody who's low income, in this case, I'd want them to own the property for a little bit longer. Oh, I was looking at only absentee still. But for low income, I might want them to own it for a little bit, right? Maybe I want them to have it at least for 3 years or so. Still have equity, click apply, and that gives me 813. But because we know that there's probably a lot of zip codes with low income in this county, I might want to apply that just to my top zip codes, right? And so you just got to kind of think, how can I maybe build some of these smaller campaigns that I can kind of go through, let your larger campaigns still can have this data set in it, but I'm going to do some very hyper-focused, smaller campaigns, on a weekly basis or on every month. You might do like pull a very niche list and tell your team like, hey, you guys narrow in and just focus on these 100 people outside of our other marketing campaigns, right? And you're going to pull deals from it. I guarantee it. But in regards to our bigger, criteria that we've done here, where we have like 62, 18, we're starting at that. And then we narrow down based on adding it. And from the most part, the biggest one I always recommend people add is senior owners. And that's going to be one of the very quickest ones to know that you're going to increase your contact rate, because senior owners are the ones that are going to give you that highest contact rate. And so in his case, if I do Jefferson, let's do our top zip codes. That's going to give me my 5,000 properties. Again, if I just apply that senior owners, that took us down to, 1,500 records, right? And so if I call through those 1,500, I do a campaign against those in this top zip codes. Again, I can add more zip codes. There's definitely another 5 zip codes that he can add, which is going to increase that percentage between, to probably 3,000 to 5,000 prospects. But those are going to be really high contact rate because senior owners have the highest connection rate. But I might do senior owners and tired landlord, where I add, because look, tired landlord, I mean, it's only 4.8%. That's just a matter of adding 15 years of ownership instead of 5 years of ownership, right? So if we do that, that's going to narrow us down to 2,100 people. Actually, still a nice chunk of people. So we can add that to the equation. Say it's, but in this case, again, this is AI included. So we're going to add that to it. And so now we got 2,100 people that added zip codes plus tired landlord. This must be not the right number. Did I not add senior owners? That's why. Let me add senior owners here. I was going to say 2,100. That seems like a lot. Let's see. It's got to be less than that. 790. Okay, that makes more sense. So 790. So, it cut about 50% of it, but 50% of the people in the top zip codes are senior owners and own, have a high AI score. And now I could always add absentee to it, right? And then if I do that, they're absentee, tired landlords. Tired landlords, a lot of people end up saying it has to be absentee to do that. So I just add 15 years of ownership, say that's a tired landlord. They could technically own the property and live in it, but senior owners, tired landlord, absentee, that's 242 people. Like, you can click to call through these 242 in these top zip codes and be very targeted, right? And then we already did the one with 85 or more. And then notice of default or notice of foreclosure. So this would be list pendants in his case. LPs. Again, we're adding AI to everything on his filter right now. But if we just do the same thing here, we'll just do the list pendants, and then we're in the top zip codes. We're going to not care about absentee. We're going to do 5 years of ownership. In fact, I probably wouldn't care about years of ownership here, but like I said earlier, we do 30%, click apply, and that's 205. Okay. And so again, we do the same thing at the neighborhood level, but the big thing to look at here is that I can save each one of these as a preset as I build them out. And I can now look and analyze and figure out, well, where is the best place for me to focus on? Based on my budget and based on my resources, where is the best locations for me to get to, the best zip codes, the best neighborhoods, and how can I, what is the reality that I can even really focus on these 5,600 in really deeply through direct mail, through cold calling, through deep prospecting. Sometimes I don't need the 20,000, like if he didn't have an AI score, he'd have only 20,000. So he'd have to narrow down by senior owners, right? If we remove the AI score, even from the equation here on probates, we get 214. So not very much. So not too terrible. But if we do that with senior owners, it's probably going to be a little bit more extravagant. Let's see. So let's keep 30% equity. Let's apply that real quick. How many records we got? We got 43,000. Now let's add just senior owners to this area. Click apply. That's 14,000. Now add a 40 or more AI score. How much does that drop it? By 50%, right? And so, 14,000 people for senior owners without an AI score is a bit more. And so for him, it could make sense to apply that AI score. In some scenarios, if he gets down to just straight distressor level, maybe he removes it. Maybe just keeps it on everything. It's really up to him. But we can allocate our resources a lot better now, create those filter presets, select them, download those into my account, and then now my marketing flow starts. If it's direct mail I want to do, then create a flow for direct mail. If it's cold calling, create a flow for cold calling. At the end of the day, for most of these, right, for anything that's like in my top zip code with an AI score and a distressor, and it's in this category, like I should be cold calling and direct mailing it, right? If possible. Especially at this neighborhood level, right? Anything that's neighborhood level with a distressor, like, yeah, send it mail, but you sure as heck better be cold calling that too.